Good morning, Noor sahab. Good morning.
I think you're a
Good morning, sir.
network. Good morning.
Good morning, sir, and good morning, all the panelists over here. I would like to welcome our guest speakers for today's session on this virtual platform. On behalf of our institute, respected faculties, and my dear students, a very good morning, one and all present over here. This is Professor Ketan Ravadia, faculty from VIVA Institute of Management and Research. It is my honor, more than pleasure, to introduce our guest speaker for today's session, Mr. Abhishek Mani. Sir is Director Investor Relation at EY with 19 plus years of industry experience. Sir has major expertise in software documentation, business strategy, and investor relation. Sir hold master degree of management, finance, and strategy from IIT Bombay and bachelor degree of technology from IIT Kharagpur. Our second speaker for today, Mr. Manoj Sharma. Sir is co-founder and director at Invest Value Fintech Private Limited. With 16 plus years of industry experience, Sir has major expertise in equities, commodities, and capital market. Sir hold MBA Finance from MIT Institute of Management and Bachelor degree in Commerce from Thakur Degree College. Third speaker for today's session, Mr. Moindin Khan. Sir is Program Manager at Capgemini India with 19 plus years of industry experience. Sir has major expertise in coaching, team building, process excellence. Sir holds post-graduate degree in artificial intelligence and machine learning from Great Lake Institute of Management and bachelor degree in science from University of Mumbai. Apart from it, Sir has achieved many certifications from reputed organizations. Fourth speaker for today, Dr. Chintan Vora. Sir is Senior Vice President and Principal Officer at Finance.com with 17 plus years of industry experience. Sir is also visiting faculty and guest lecturer with reputed B School from past 6 years. Sir has major expertise in product innovation, financial advisory, strategic management, team management, wealth management, training and development. Sir has also presented 6 research papers, out of which two of his papers are awarded. Sir hold PhD in management from Carlock Teacher University, advanced program in strategic management from IIM Calcutta, certified financial planner, PGDM in marketing finance, also in corporate communication from MSRM Bangalore, and last BBA from MS University Vadodara. It is my great pleasure to welcome such a noted personality at our guest of honor today. So, on behalf of one and all present over here, let me please extend a welcome to all the dignitaries. Sir, I further request you to grace the session by starting as it we all are excited to hear you.
Thank you, Professor Ketan Ravadia. I welcome all the panelists, Mr. Abhishek Mani, Director ENY, Mr. Manoj Sharma, Co-founder, Director, Investor Value Fintech Private Limited, Mr. Moidun Khan, Capgemini India, Mr. Chintan Vora, Senior Vice President, Finance.com, in today's Finance Conclave, Business Governance and Ethics. This panel discussion we are organizing in association with University Mumbai. I welcome all the panelists live here from various management institutes and degree colleges. I thanks to all the working members of Finance Conclave and Industry Institutions Committee for organizing such wonderful program. As you people are knowing, today's session of business governance and ethics, it has vital role for long-term sustainability for any organizations. There are many evidence that many large organizations have failed due to governance and ethics issues. Role of governance and ethics has a major role for long-term sustainability for any organization. It may cost you in short run, but definitely gives you return in long sustainability period. To discuss in detail this topic, we have our eminent panelists. All the panelists has rich industry experience, and I am sure that from today's session you will definitely learn. I thank all the panelists for accepting our request, University Mumbai for granting such permissions, and by management for granting permission to organize this event. Now I request Mr. Abhishek Mani to lead this event. Thank you.
Thank you, Professor Lohar.
Thank you.
Thank you everyone for joining our session. And with your permission, I would like to start the session. And So the topic which has been given us is very imminent in the current times, and it is gaining in prominence every day with the newspaper headlines coming in with the NSC and other scenarios. So just to start the panel discussion first, I would like to give a brief introduction why this topic is important, and from my past experiences working with the listed companies, I will give some examples how corporate governance and ethics are critical for value creation for any corporate. Then my other panel members will further put emphasis, like Ms. Manoj Sharma ji will put emphasis on the fintech world, and my other colleagues will further put more focus on this topic by giving the live examples so that we can have a fruitful discussion today. So this corporate governance and business ethics is gaining very importance and momentum in this world because, however, people try to short-sighted things by by achieving the milestones, doing some tactical work, which they may feel that in the short run it is successful, but over the longer run has been observed that business ethics and profit go hand in hand for a sustenance. So that's why in nowadays in annual report also many of the large companies are having a section of sustainability because whatever you're doing ultimately it has to be sustainable. So this has to be done through following all the rules of governance and ethics. So if a company wants to survive and grow in the long run, it has to discharge its obligations to the society. So that's why sustainability is a very key word. And so the corporates have to pave the way for ethical foundations. And corporate governance system is simultaneously to improve corporate performance and accountability as a means of attracting financial and human resources on the best possible terms and preventing corporate failure. So we all see like advertisements come in like the best employer and all that. So ultimately, if the corporations who are ethical and following best practices will be able to attract the best talent and which will lead to the sustainable growth. So in corporate governance is all about promoting the fairness, transparency and accountability with the growing strength of consumer. Now, just to take some examples, how corporate governance is key. So right now we are all seeing an example of NSE. So NSE is a world-class institution, one of the world's largest stock exchange, and it commands more than 90% turnover in India and is the premier stock exchange in the India. But and NSE has been planning an IPO since last 2 3 years, but there has been several delays, which has caused immense pain to the stakeholders. So the expected valuation of the IPO and when the NSE was expected to list is more than 2 lakh crore. So you can see the kind of mammoth valuations which NSE should command if it had got listed on time. However, the stakeholders have suffered a lot because of the various ethical problems which such a good institution is suffering. So recently in the newspapers, you have seen about Miss Chitra, who is the ex-CEO, being talked about that she has been taking directions from the some Himalayan yogi and all. So which has further complicated the matter. And to start with, how did all it is started? It all started when SEBI got complaints some time back on the co-location issues, where it was said that NSE is providing some brokers the information much ahead of the others. So it was a kind of a preferential treatment. And as you all students of the finance and law know that as per the insider trading regulations, nobody can have a differential advantage in terms of any kind of insider information. So SEBI started this probe, then all these things started uncovering. So now all these issues is now defaming NSE, and it is making matters complicated for all the stakeholders. So the IPO, which was planned somewhere around 2018, and we are sitting in 2022. It has been a lapse of 3 to 4 years, and still we have not seen the launch of the IPO. So the kind of a loss due to this is like more than 2 lakh crore, which could be the listing valuation of NSE. It has been impacted just because of these kind of the business and the governance issues which have been caused by NSE, which is a world-class institution which itself created many regulatory bodies like SEBI, etc. So we see how the wealth has been destroyed, which is the aim of the corporate finance. That ultimately the aim of the business manager is to create the stakeholder wealth, and this is done by the shareholder valuation. And another example, if we see, is like with the example of like ICICI Bank. So ICICI Bank is also very recent, like 2018, 2019 example, where Miss Chanda Kochar, who was touted as one of the powerful business women in India, and she was the MD and CEO of ICICI Bank. When the allegations of nepotism and corruption surfaced against her, that like she gave loans to the Videocon group, and lieu of that, her husband firm got advantages from the Videocon group, and this scam got further like unearthed, and many allegations of money laundering, and they were also put behind the bars like harassment. So this like totally tarnished the name of the ICICI group, and it was a big reputational damage to the ICICI group. So what did happen due to that? Like the ICICI Bank valuations got eroded and suffered a lot. All the group companies of ICICI, like ICICI Bank, ICICI Securities, and other, suffered a lot during the period of 2017 to 2018 due to this fiasco. So the it all started with a whistleblower complaint, and then it ultimately led to the exit of Ms. Chanda Kochar. So how did ultimately it got resolved? So once Ms. Chanda Kochar had to exit her position, and Mr. Sandeep Bakshi came in 2018, and things like he slowly he did the damage control exercise, and the trust on the organization was again reinforced. So we saw the significant value creation in the shares of ICICI Bank. So ICICI Bank group company shares have more than around tripled since the exit of Ms. Chanda Kochar. So that's clearly shows the kind of importance which business ethics and governance has in the kind of the value creation. So ultimately, the valuation is based on two model. One is how the business is performing, and so which may be the same. Like even during the Chanda Kochar period, the ICICI Bank might have been performing well, but the perception in the stock market got tarnished. So other element lever of valuation is your perception. So once he exited, the perception got enhanced. Like all the rules and regulations are being followed by the organization. People can rely on the books. So that shows the kind of the valuation which got created by the ethics and the governance policies of the company. So another like example which is coming to my mind is like often the biggest NBFC company in India, which was the ILFS scam. So ILFS, we know that like was the biggest NBFC of the time, and people were it was given always giving a very sound credit rating. So like all the rating agencies have given a AAA kind of a rating than ILFS before this scam was unearthed. So what was happening in ILFS was there are many entities who had got created in ILFS. So the financial position of the company was not that great. However, they were able to service all the loans, and they were showing good results in their accounts by kind of evergreening and something by related party transaction. So whenever a loan was to be paid by one of the group company, the other group company would pay the money to that company, and get the money back from the fresh loan from the bank. So kind of an evergreening was happening, which got unearthed when Mr. Ravi Parthaswati was taken behind the bars and quizzed, and the credit rating agencies were further quizzed on this during the forensic audit by Grant Thornton. So this then it came to know that the financial situation of ILFS was pretty bad, and what the picture was shown to the market is not correct. So how then the damage control exercise was done? It was like big fiasco because such a big organization like ILFS having 1 lakh crore of loans, if that organization fails, what happens? It will lead to a systematic collapse, and it will lead to like the total mistrust in the Indian financial system. So this crisis of confidence was again resolved by putting in a very immediate person like Mr. Uday Kotak. The government of India appointed him as a chairman of ILFS to resolve the situation after the exit of Mr. Parthi Sarthi. Then, through his strong ethics and business acumen, Mr. Kotak has been successful in turning around the business, and now they are expecting more than 50% of the loans to be resolved in a very short period of time. So this has been how a successful turnaround has happened, and the kind of systematic risk which banking system would have to undergo if ILFS would have fully collapsed. was resolved to some extent by bringing in the corporate ethics and the strong business acumen of Mr. Uday Kotak, who has built a very magnificent institutions like Mr. Kotak Bank. So at one hand, we have problems like the organizations which didn't follow the proper ethics, like ICICI Bank during Chanda Koja time and ILFS, and the problems which suffered. On the other hand, we have also have an examples. So what happens when a very strong business ethics comes into the picture and organizations gets created on the pillars of a strong corporate governance ethics? Two of the prominent examples in such cases, which is coming to my mind, is Kotak Mahindra Bank and SDFC Group. So Kotak Mahindra Bank is an SDFC group like SDFC Bank and SDFC Limited are the kind of organizations which are commanding like Kotak Mahindra Bank is commanding somewhere 4 lakh crore of market cap, and SDFC group like SDFC Bank and SDFC Limited is currently commanding a valuation of more than 14 lakh at odd crore. So you can see how this big organization has got created, and these two organizations were not very old organizations. They were incorporated somewhere around 90s. They came into the public issues, etc. So within a short period of time, they have created immense value to all the stakeholders, employees, their shareholders, and all. And how has been achieved? This has been achieved due to the very strong ethics and governance model, which has been inbuilt by their like the prominent leaders like Mr. Uday Kotak and Mr. Deepak Parekh, who has been the prominent face of the industry and turning around the businesses by way of ethics and governance. So another example of Mr. Deepak Parekh, who has turned around the business, which has got into mess due to corporate ethics, comes to my mind is Satyam fiasco. So we all know what happened in 2008 when Mr. Ramalinga Raju wrote a letter that the company doesn't have the cash and the books were not correct. So the whole hell went loose, and the stock prices of Satyam collapsed to around 2 or 3 rupees from 150 rupees in a short period of 2 3 days of trading. So there was a kind of systematic collapse, like the foreign investors would have felt that the Indian company they can't believe in the accounts, and how that the situation got resolved. The situation got resolved by again putting the prominent person of Mr. Deepak Parekh and other leaders, and they turned around the business, and eventually Satyam got acquired by the Mahindra Group, and with the strong ethics of Mahindra Group, the company is now very sound, and it is now known as Tech Mahindra and is growing forever. So this is the kind of examples which coming to the how the successful businesses are created for ethics. Now I'll leave the floor to Mr. Manoj Sharma to take it further with his example. Thank you.
Thanks, Abhishek. Good morning, all of you. So, nice to connect with you all. As an example given by Mr. Abhishek Mani, okay, he talked about corporate governance and largest exchange and top one of the top private bank sectors about examples. But for me, business ethics and the governance has a clear intention of management and clarity, which is more required for us. Like in a given example, as Mr. Mani said, the perception of the management is required. So I'll give you best example of my personal. I was talking to one of the junior employee of Tata Group in Bhilai. Okay, so I spoke to him and said कि क्या इतने जूनियर लेवल पे काम करते हो, यहाँ करते हो, आपको सिटी जाने की इच्छा नहीं होती, आपको बाहर जाके काम करने की इच्छा नहीं होती. So one point he said, सर वो सामने आप इंस्टीट्यूट देख रहे हैं, यहाँ पे मैं काम करता हूँ, वहाँ पे मेरा बच्चा मेरे स्कूल में पढ़ता है, वो टाटा का है. आप अगर आप वहाँ देखेंगे, मेरे लिए टाटा ने बच्चे के लिए एक इंस्टीट्यूट दिया है जहाँ पे मैं उनको इंजीनियरिंग करा सकता हूँ. दैट वाज द बेस्ट थिंग. आई लर्न दैट के द एम्प्लॉइज आर योर मेन सोर्स ऑफ इनकम, यू कैन से दैट. सो आप अगर एम्प्लॉय का ट्रस्ट जीत लेते हैं, फर्स्ट ऑफ ऑल थिंग दैट यू सी इंटेंशन इज क्लियर दैट यू वांट टू ग्रो. That is the best example I've seen, and it was a live example. And then comes to the management, what clarity they has in their mind. Like in example again, I will talk about Tata. If you see the 2 3 years back, Tata was not doing well. All the companies were into in a crisis situation, kind of crisis situation. They were not doing well. Profitability was not that round. And then suddenly, Tata Group chairman, Mr. Ratan Tata, has appointed N. Chandrasekhar as an Tata Sons chairman who was heading TCS previously, and his turn make a turnaround and become the largest technology firm in India for that. So he turned the Tata companies into a different ball game altogether. And you see, last 2 years when the market is going, the Tata companies has grown like anything. Even you talk about merger with Jaguar and Land Rover, which turn around the story of Tata Motors. Whereas other companies like Tata Tele, and there are so many examples. TCS is already an examples itself. So there are different things. The clarity is intention of management. That is the more required when you start talking about businesses in governance. And I'll give you, as in, I come with the finance and fintech background. I have seen that example given by Mr. Mani. Banking and financial services has been targeted because lots of scandals and scams, and there is no exception to it on this. But my opinion that because investment banking and banking channel has so many processes which is are manual, okay, which create a manual intervention and create a problem in business running cycle. So what I say that, and what is my view is that fintech can add to that level and try to be a process driven company on a technology basis, which help you to reduce the minimum uh, intervention of the people, which can again say help companies to be a non-ethical company and have a clarity on that process. Again, I would like to say that compared with the industry in fintech, which has an over, I do not say that only a fintech company is the exception to the scandals and scams which maybe happen, but the intention is clear. That is my one of the point. And then second thing is that there are so many things which required to run up a business. If I will not name it of a company, but it's a non-listed company because we talked about on listed companies. But there are two technology-driven companies in a listed space, which is the fintech space. One is the top discounted brokerage, and one is another payment gateway for the uh, India. So Paytm is the best example. They try to be in each and every business of the streams. Like they started payment, traveling, ticketing, and everything. And you see the result. You have to be a focus on your business, what we are doing it. This is the best example I can compare with the fintech company, a Zerodha. Because Nikhil Kamath has a clear intention and they want to do it a single business with the employee centric. Why they are employee centric? Because the main core area of their business is an employee. Technology driven company has their core focus on employees and a customer. If you see the Nikhil Kamath and Nitin Kamath, both of the brothers, they are focused clearly. They are directly connecting with the people via Twitter, and whatever the issues they has, they directly contact employees and their customers. Any issues happen with their applications, they directly say that "Okay, we had an issue, we apologize for that." That is the ethics you need to be there in a corporate. आप जाके बोलते हैं उनको कि आपके सिस्टम में इश्यू है, that means you are accepting your mistakes. That is the biggest thing which required in nowadays of corporates. Again, if you talk about a Paytm, they had so many issues. They tried to build a system in a different way. They were the masters in a payment bank. They got a small payment bank license as well, but they entered into the mass classes business. Each and every business, even in the broking, they diversify into that so many things which might give you a compromise situation in ethics and governance, because you have to so many compliance issue which need to be taken care of. That if you are focused on your business, your compliance and regulator issue will be compromised. So you have to focus on your business. That is my main thing. And for that, how you can do the corporate business and ethics for me is a there are 5 points needs to be connected. The trust, you need to trust your employee, you need to trust your customer base, and again you have to be accountable for what you are doing, whether it is positive or a negative. And you have to be a proximity with your teams, or you have to depend on. I cannot say sorry to say that, but I'm not going to depend. You have to pretend to be a low proximity with your customers and employees, because if every business has a 2 point, one is a customer, second is an employee. For me, as in fintech company, the employee is the main asset for us. Again, vis-a-vis customer, which can give you exact what we called an example. You give you better feedbacks to improve your business. So if you have clarity on that, that will give you better options. And that is the things which I said is a best example which I given to you. So over to you, Mr. Abhishek. Abhishek sir, over to you.
Yeah. Hi. Thank you, Mr. Manojji. Mr. Moin, I would request now you to take it further.
Thank you, Mr. Mani, and thank you, Mr. Manoj. I think um, good morning to all of you first. It's a Sunday morning, and all of us have, taken out time to, learn something that can definitely help us in our, careers, as well as, take us in the best way possible for the long ambitions that we have. Yeah. Um, if we start with what Mr. Mani and Mr. Sharma spoke about, some quick bites from there. When Mr. Mani said, business ethics and profitability go hand in hand. Yeah. And when Mr. Sharma said that, the less the manual intervention, okay, the more control we have on the ethical processes, right? So that's how the technology and the humans are getting blended, right? So what becomes important in all of this is, for us to know as individuals what is our personal accountability towards, the organizations and towards the society and towards the betterment of the businesses, right? Now we may think that we are the junior most employees, as Mr. Manoj rightly spoke about one of the employees who was working in Tata. So regardless of which position you start your job at or your career at, one thing will remain true from your first day till your last day of retirement is your integrity. This is something that will never go away. Okay, this is an important aspect that we have to keep in mind. Any person, the performance will also come secondary. The first thing will come is integrity. Now definitely we often have a lot of definitions about integrity, but there is one thing that stands out and is very easy for us to decide upon. Whenever someone speaks about integrity, what do we talk about? We talk about one simple element. Okay, I know what is right and I know what is wrong, and then I have to do the right. Okay, so it is the awareness. This is right and this is wrong, and then you do the right out of it. Okay, this is the best way for you to take the right decision in any business circumstance. And the example of Satyam, the example of ICICI, these are really good examples when we really think on the intention behind those damages that have happened to the organizations. In the ICICI example, we see that the intention was to support one of the family member where they could not say no because that requester of loan is the husband of the CEO of that company, of that bank. So it becomes a favor, right? And it is very difficult for one individual to say no, okay, this person does not qualify for this kind of credit. On the other hand, if we look at Satyam, okay, they were living in a very competitive world. Early 2000s for technology in India was very competitive because a lot of business from the onshore markets like Europe and Americas was being sent to India for benefits of costs. Now when all of that was happening, okay, Satyam had a lot of competition, and in that competition they ended up doing these fundamental mistakes of not being ethical. So two elements. First thing is we should know what is right and what is wrong. Second thing is, okay, if it is about, okay, he is my known person, he is my relative, he is my friend, let me make an exception for this person, will lead to a damage. Another situation is I am under pressure. If I don't perform in this quarter, if I don't perform in this semester, what will happen? Okay, I will be getting a very negative rating, or my revenues will drop, or my profits will drop. So to cover up, I take some decisions that are unethical. Now, how all of this relates to, we always and often talk about it. These short term gains are called short term because eventually everyone will come to know about the widespread malpractices. So, if one person starts doing that in the organization, everyone thinks that it is normal to do so. And when everyone does it, it becomes widespread. And when it becomes widespread, it creates a hollow layer in the organization, in the foundation of the organization, which is then about to crumble. And this is why it becomes important that, do not accept malpractices as a norm. Do not do that. And all of us go through various circumstances in the company. Sometimes we are under the pressure of our boss, sometimes our colleagues, sometimes this or sometimes that. But eventually one thing will stand true, that first is your awareness. If you know that 2 plus 2 is equal to 4, in that account you cannot write it as 5, you cannot write it as 3. This is your awareness that you have built through your education. This is the education that have been imparted to you. The second awareness is how the industry works, how the policies of this company work. Is my company allowing something? Is my organization and industry standards allowing something for me to do? That is something that you have to learn by joining that industry, by joining that organization. And after you are aware on these two aspects, the fundamental aspects of what 2 plus 2 is, which you have gained through your education in your domain, and the second aspect is how that industry is regulated, how this industry is working, you gain that awareness after joining that industry, then you know that you are in the right position to take a sound decision. Now there will always be scenarios when you do not know what to do. Okay, so I'll take a pause here. There are scenarios when we do not know what to do. So what do? We raise our hand and we say, can you please help? And you ask for help. Okay, you ask your colleagues or you ask your seniors or your seniors ke seniors, anyone, but you ask for help. If you end up taking a decision which unknowingly or unintentionally is wrong, it can have a very big ripple effect. Okay, and it can become a practice for other people alongside you who are unaware that this may not be the right practice to do. So the element that I am trying to highlight here is 99% of the times it is intentional when we take a decision. 1% of the time it can be unintentional. But in an organization, in any businesses, right, in any industry that we work, okay, we cannot allow whether the 99% or the 1% to exist, because both have the equal damage. Yeah, so it is better to ask than to assume, right? And this is why, when other companies give us businesses, when customers, open up accounts with us or invest in us, or other service providers give us more businesses, why are they doing that? They're doing that basis two things that Mr. Abhishek Mani and Mr. Manoj Sharma spoke about, and then when I pass it on to Mr. Chintan Vora, he'll elaborate more on that. Yeah, what are those two things? One is the corporate governance and ethics. These go hand in hand, which means that everyone in that corporate governing structure know what is my responsibility and what is my accountability. If I don't do this right, how many people and how many livelihoods are going to get affected? And second thing is how the trust is built. And the trust is built only on two factors. One is competence and another is character. So when I am giving you the business, I am confident that my customers are safe with you. In today's environment, we know that data, third party data, selling of data, this information, private information, personal information is all accessible by all the organizations. But how the organizations take a wise decision and a sensible decision not to make it public or to keep it secure, to invest in the technology that keeps it secure, is all equally important. And if you have gone through the recent RBI guidelines, all the credit cards or debit cards that are used for online transactions, they have now started using tokenization of them. The purpose of tokenization is the same, that people do not get direct access to your cards, but those are in some format called encrypted. It is a basic form of encryption, but it is right. So the idea here is, um, in the message, is what is my personal accountability in this entire ocean of this industry, of these organizations, of these businesses. Maybe I'm just a one fish in this big ocean, but that is equally important and playing a very valuable role. And that is how we have to perceive ourselves and then take decisions forward. Okay, I'll take a pause here and I'll hand it over to Mr. Chintan Vora, and then we can have feedbacks with each other. Thank you.
Thank you. My all my eminent panelists have spoken a lot about the corporate governance. So what I'll do is I'll not touch base on the core of corporate governance, but I'll just look at the peripheral part of it, because I'm sure the larger audience who's listening to us are all those millennials who are ultimately going to be part of some of the other corporate houses in future. So there's a saying that what you practice is what you permit, and vice versa. So what you permit is what you practice. Now, this holds very apt and very true in terms of in case of the entire corporate governance case. So while I quote this, what I really mean is that corporate governance basically is a very top-down kind of an approach. This is how the things are always being perceived. So we typically say that the entire organization should have only one voice. Now, इसको समझाने के लिए ना, I'll just narrate a story from one of the movies, because relating any subject with a story is the best way to learn. If you see a movie called 300 Spartans goes out to fight probably a lakh of army of Persians. It was joined by only 1,000 Arcadians. Now Spartans are very disciplined. One voice, that is what makes Spartans as Spartans. So 300 men going and fighting out a lakh of enemies. When 1,000 people joined, it was a bigger force. So when Arcadians said that Spartans, we are 1,000, we can join you and we can enrich you in terms of the force, so we can battle it even louder. The Spartan king asked Arcadians, "Who are you?" One by one, each one of them replied, "I'm a cobbler, I'm a priest, I'm a potter," and kind of a stuff. When the same Spartan king asked asked his own men that, "Spartans, who are you?" It was just one voice, and they said, "Yahoo, Yahoo, Yahoo." It means that the entire organization had one voice. And in response to that, the king said, "Look, Arcadian, I've got more men than you." So what I mean to say is that when an organization has got one voice, one command, one structure, one ethic, one rule, the organization becomes much more stronger. And this is the entire principle which lies behind the entire, behind the theories of a corporate governance. Now, I've been into the financial industry for almost like 17 years. So any transactions that happens in any of the industry, the core of entire transaction is going to be money, the finance. And that is one of the reasons why most of the scams, scandals, corporate governance cases basically happens to be from finance industry, because if there is no money involved, there are no scams. Simple as that. Not that scams doesn't occur across all the various organization, but the root cause is money, and money is all central to the banking institutions. Now, what is caught is a scam. What is not caught just goes under the sheet. Now, what we need to understand is the entire objective here is not only to identify, what is a good corporate governance, what are the case studies on corporate governance. So I was very delighted to hear, two sides of the stories. One which spoke about the cases that has happened due to breach of corporate governance. That's a learning. The other side of the story that I heard in this particular forum was cases wherein the corporate governance is so strong that it has built organizations all throughout. Right. So hearing both the side of the stories, what now I want to leave forward is that when it comes to corporate governance, basically or largely it is all top down. So board of directors, which are handful of people, we can probably count them, defines the rules, defines the controlling guidelines, defines the regulations, or defines the objectives, the way the organization functions, which is going to go and impact masses. And when I speak about masses, we have already heard about cases, which is to do with NSC, with ICICI, with Island Affairs. This has touched some few lakhs and crores of individuals. So a good corporate governance can do better to all these particular individuals. A bad corporate governance do not only harm the reputation or the financials of a particular organization, it also impacts the employees, it impacts the families of the employees, it has got all the stakeholders. Now stakeholders are not only the employees, the customers and the employees, which Mr. Sharma rightly identified, these are two major stakeholders, but there are peripheral stakeholders. It impacts them on a very large scale, right? Now we all use some or the other mode of a governance on our day-to-day lives. Now one of the form of governance that we use, each one of us, when we hit the road, we are used to opening up a Google Map. Now Google Map is not exactly a corporate governance. I just wanted to put it as an example that what a good governance a Google Map does to us. It says that which road is blocked. It tells you at what speed you are heading to your destination. It tells you when you are exactly expected to reach, right? Now, when we have that Google Map in front of us, it is up to us whether we follow that Google Map or we deviate from the Google Map. Any deviation also is indicated on the Google Map. So this is another example that I want to set forth, that whenever you are into any kind of a practice or part of the organization, each one of the individuals, right from the management to the bottom pyramid of the, bottom of the pyramid, every employee, every stakeholder has to be a part of this entire process called corporate governance. Now, again, relating back to, the Google Maps example, that when you are governed well, the chances of you to reach your destination right in time is is almost close to being very accurate. So is the case with the larger organizations. If the corporate governance practice of the larger organization, or any small organizations as well for that matter, is very clear, there are no chances that any employee is going to be deviating. Relating back to that example of, movie 300, when everybody had one voice, so the objectives are the same. I'll give one of the examples. Like Mr. Sharma happened to be part of one of the fintech organizations. Now, fintech is a very small organization, right? Unlike banks, we do not have a brick and mortar kind of a setup. We do not have some, 50,000 odd employees. A 50 employee team is good enough to cater to a base of somewhere close to probably 5 lakhs, 50 lakhs, even 5 crores kind of a customer base. So very few people is going to impact larger set of lives. There was an activity which we got done some few years back. Now, what this activity was, we had all the employees being seated there in the organization, right? 50 of us in one of the conference rooms, and we gave chits to each and every employee and asked them to write down what you think is the objective of the organization. Now, trust me, because it was a new organization, and I'm talking this, more than 5 years back, now that we've evolved quite a lot. So 5 years back, out of 50 people who were seated there, we had 30 different set of objectives for the organization being written by the employees themselves. So can you imagine a 50 लोग बैठ के 30 अलग अलग objectives define कर रहे हैं? So where is the good that is happening to the end consumer? And post that, the entire organization came up with only one single objective, and that objective was customer at the center. Anything that is going to impact customer, right? Any governing practices, any rules, any regulations, any development, any deployment which is going to impact the life of a customer directly has to be put in very right as a very right practice. So ideally, from being Arcadian some 7 years back, gradually we are turning out to be an organization which is an organization of Spartans. So that's a kind of a paradigm shift that happens when the top management defines the regulations very clearly, defines the guidelines very clearly on the corporate governance. Now, what corporate governance basically mean, and we have not touched base on one of the topics that while we speak about corporate governance, how is it going to really touch on the ethics part of it? All the examples that we gave, there was a corporate governance in place. Not that none of these organizations did not had a framework of corporate governance. It was right there. But what got breached was the ethics. And it gets breached at an individual level. It transpires to a little larger in audience, and gradually it engulfs the entire organization. So a good practice of corporate governance has to be continued. Later, in the discussion, we'll also touch base on, we might talk about, my other panelists will also be talking about what is a good governance, what are the right kind of practices. but very important that we touch base on a topic as to what are the methods or set of rules, the dedicated rules rather, I would say, which ideally will define that this corporate governance practices which are already laid down, written down for the organization, continues over a period of time, is improvised over a period of time, and is practiced by every individual who happens to be stakeholders. So in nutshell, when we speak about corporate governance today, to start with, it is all a system which has to be directed well, and at the same time that it is directed, it also has to be controlled equally better. So that is how we sum up the entire the initial part of the corporate governance. So I leave the stage back to Mr. Abhishek Mani for the further discussions, and we can dwell more on the other practices.
Thank you, Mr. Pora, for giving a very insightful insights on the topic. So, just to sum up what my eminent speakers have just now told, so what are the benefits of the West corporate governance practices? That it will enable to increase the efficiency of the business, and at the same time, it will help in minimizing the risk. So, if you are following all the corporate ethics and governance practices, the kind of the collapse of the system like ILFS or DHFL, or or the kind of systematic risk which is now NSE is seeing, or for many other business houses like Reliance, Anil Ambani Group, which was one of the like earlier 10 year, around 15 years back, Mr. Ambani was the second richest in the world and has fallen out. So all these kind of systematic collapses which you have seen will you will not see if the corporate governance practices are followed strictly as per like the proper proper policy, not just as per the books, but follow in the full ethics sense. Like you don't go around the law just to meet the laws, but actually in the spirit you are following everything. So that is what is more critical. So like on the like even in the case of the NSE, the what is being surfaced is like the many of the things which the company secretary and the other board of the directors should have raised the objections when all these things were going on, the insider information were revealed to the Yogi and other thing. They never questioned all the kind of the compensation which was given to Mr. Subramaniam when he was appointed, and suddenly compensation was hiked every 3 months, 6 months. So there is an independent board of directors who were of very eminent stature. So, like, instead of asking those questions to the management, they just swept the carpet. So the same thing happened when the case of the Chanda Kochar as well. So ICICI Bank, if you see, they would have a very strong corporate structure framework in the websites and everywhere. So all the policies are there, but their people have been able to circumvent that. Like in the spirit, they didn't follow that, and the law they followed it. But like when the loans were granted to the Videocon group, in which the husband of Mr. Kochar was the party to that, who was beneficiary of that, she should have rescued out of the process of giving the loans, but she never did that. So in that sense, like you were a party, like in a sense, like if you have a vested motive, you should not get involved in such decisions, because you are the decision maker as a CEO. If you are the decision maker, you have the topmost, so nobody can say no to you. So if you are in that committee, so then definitely nobody can go against you. So these kind of things, like you just not have to be like following the rules, but you have to also be in the visual eyes of the others. It needs to be that like you are following everything correctly. You might be not doing it wrong, like maybe video call interload was also with right intention. Now it turned out to be a business decision that was wrong, that NPA. But like many cases, she might say ki at that time when I gave the loan, the Videocon group was good group, and it was following everything correct, the books were right, and I gave as per the business decision. But as per the ethics, if you had a vested motive, you should have rescued out of the process. So that's where the ethics parts come into. That your act should also be seen from the third party as being truly following all the rules as per the spirit. So ultimately, the benefits which come in, like if you following all these rule and ethics as per the best practices, like how the SDFC Bank and the framework of like Kotak Bank has been built in, what happens? You get the best access to the capital market, and it increases the cost of the capital in the company grows significantly. Employees want to work in such organization, so you will be able to attract the best talent and with the best capital at the lowest rate. So what will happen? Your organization will significantly create value to all the stakeholders. your strategic investors will come in. So if you see the shareholding pattern of the companies like Kotak Mahindra and SDFC, always if you see the FII's limit is reached. So the day like whenever very few days you will get an FII will get an opportunity to buy these stocks, because whatever is the maximum limit which an FII can invest, normally these stocks attract that kind of attention. And these companies are the best valued banks, like even being a developing nation bank, if you see the valuation, the kind of the valuation, the multiples they enjoy, they are the best in the world, the Kotak Mahindra Bank and SDFC, because the organizations over a period of time, people have that perception, the kind of the framework and ethics which Mr. Parekh and Mr. Kotak has built in such organization, it's immense. They feel that it's an immaculate nature. So the same earnings for some other bank, you will see the price to book maybe 1.5 or 1 or 2 times, while for Kotak and SDFC it will be around 5 times. So the difference in valuation is immense due to the kind of the roles and ethics the businesses have been built on. So that's why it is a key driver. So ultimately, the kind of the valuation which the gives the Tata Group is another example. The kind of Ratan Tata and his earlier predecessors have built in the name of the Tata Group in India. So people have a trust in Tata Group. So even if the companies are they might be loss making due to business downturn, but they believe that the companies will turn around, and always investors come in to invest in such organization. Employees want to join in such organization. So you will have very few failures in such kind of a groups which are created through ethics. It will not that even if they are into many businesses which face the problems, but ultimately their rebound up happens. So Tata Motors is a classic example. Then when they acquired Jaguar, people felt that it's too highly a leveraged corporation, so they have done a mistake. But ultimately, Mr. Tata turned around. Same happened with Tata Steel. They bought a corporation, Chorus, which was having very high debt, and to acquire that, it was of much bigger size than Tata Steel, so they had to take a significant amount of debt. And steel being a cyclical business in short run, there were downturn in the stock prices of the Tata Steel Group, but ultimately, due to the strong ethics of the corporation, the business got turned around, because Tata is built on the trust and the ethics framework. So it ultimately it leads to, be in the case of banking system, we feel that if there is ethics and governance are very strong, then what happens, it leads to the strong standards of the lending. So people trust on your books and they give you the lending. So you get the right kind of money whenever is required, and it helps in protecting the minority shareholders. So we see nowadays the proxy advisors are also acting as a activism. So regulators are asking even the mutual funds and all to be more active in protecting the minority shareholder right. They're asked to vote on the proxy votes, etc. So that any decision which any corporate is taking, which may be harmful to the other investors, the bigger investors have the duty to protect the minority investors by voting against such resolutions. So we have seen activism from that side also, like in case of managerial compensation, where the compensation has been above the law. So many of the corporations like Eicher Motor CEO reappointment, also the board had in the proxy board, the resolution was defeated. So we see more activism is coming from the minority investors in terms of the importance they are giving to the corporate ethics and governance policy. So all these ultimately strengthen the reputation and raise the level of investors and the client trust. So these are very tangible benefits, which is coming to, just to summarize the point, which I felt which is coming out. So I would like now Mr. Manoj Sharma to add on any further point you'd like.
Yeah, right. No, so I guess we have covered all the things, pointers. The thing is clarity and intention of a management, as Mr. Vora also said, that intention and management's clarity is more important, and which is ethics of the any businesses. May corporate and company may fail due to individual, but if you have a ethics and no clarity on the objective of the business objective or company objective, clarity with the in terms of customer as well as employee, you see a growth in your organization which is immense. That is from my side.
Mr. Khan, would you like to add something?
I think it is about echoing this message but it helps, when we do the messaging in different ways and with newer examples. Yeah. So in the end, the growth that we are talking about, that we are referring to, every individual, no matter if it is a small transaction that they do in a shop or in a market, or any big transaction that happens in an organization, all these transactions happens based on two things. One is the trust, another is the value, right? And if you know that, if I have to spend an extra m- penny to get this transaction, because I can trust this person, because I know it has the value, someone will invest in it. And that is why we see that eventually, when the ethics is in line, everyone has the right spirit, as all the eminent speakers spoke about. The people who want to do business with us, okay, are doing that business, not thinking about money or profitability or margins at that point in time, but they are looking at the value that we bring and the trust that they have in us, which will take their organization along with us for a longer period. So it is not a short term stint that someone is getting into get rich quick scheme kind of. If people are running organizations, they want it to run for centuries and decades, right? So the eventuality is that they will always invest in value and trust, and this is where all of us play an important role. So whenever we look at something, whenever we engage in any transaction, we should think of it in this way. Okay, what is it that we are really giving back to the customer or that organization we are doing that business with? And if you see there are some unanswerable scenarios there that you really cannot answer or defend, you have to start getting into investigating it and finding the right answers, because that's where you can stop a Titanic kind of situation, right? Just make sure that if you feel there is something that is wrong, stop right there, go deeper until you get a convincing answer. Don't move forward. Okay, this is what I can say, and I'll request my colleagues to elaborate on it. Yeah.
Mr. Bora,
I
please.
like I like some few points to this. See, while we speak about when we lay down the principles, different organizations lay down different principles. I would rather club it under, four different things. One is the trust part. We've all spoken a lot about the trust part of it. So a good corporate governance will ensure that there is a lot of trust. The second very important principle that we need to identify when it comes to a good corporate governance, that along with trust, there has to be a lot of transparency. Now, how this transparency comes into picture is that whatever is the practice, a good corporate governance practice, that's an information. It needs to be disseminated to right audience at a right time. This is what will create a lot of transparency into the system. More the systems are transparent, right? More are the chances that the entire practice of corporate governance, more are the chances that the ethical behavior in the entire organization will boost up. Third thing is that when the organization becomes very transparent, every individual in the organization will feel very empowered, right? So they will have a lot of sense of responsibility to themselves. So the third very critical principle that comes into picture after trust and transparency is feeling very responsible, feeling very empowered. When the organization, so when individuals are empowered, overall it is a submission to the organization. The entire organization gets largely empowered, and that's where typically what we say, the revenue goes up, the cost comes down, and a lot of other financial implications on it. The attrition really goes down to a rock bottom level, and a lot of good things happens. And the fourth thing is an utmost fairness. The worst breach of fairness that happens from management is to the employees, and then it gets passed on to the consumers. Now, I happen to be from a banking industry. It's not a taboo to speak about it, but you look at what a bank relationship manager has to go through, right? I have seen that journey myself, and I've seen it for a lot many other relationship managers. The first thing a relationship manager is asked is to go and sell ULIP policy. Now, who governs or who decides what needs to be sold to the customer? Is it a need-based sales approach? Now, here in a very broad spectrum of the corporate governance, we are just pulling out a very small droplet of it, and basis this, how some organizations have succeeded, and how some financial organizations we have seen them failing miserably. The moment I go and sell a wrong insurance policy to a client as a relationship manager, what I benefit is on a short term. What I lose out is on a long term relationship. What banks loses out, or what the financial institution will lose out is on the customer forever. राइट सो एक छोटा कस्टमर आज जो मुझे 500 रुपए का रेवेन्यू दे सकता है ना, द सेम कस्टमर इफ नर्चर्ड राइट, and when I say nurtured right, it is again top down. Give him what is right. And while I'm quoting only an example of the banking industry, it goes right for all the industries and for all the aspects of the jobs, careers that we are all in. So give the customer that is right. That's where I connect my dots to saying that, while you have to be fair to everything, you have to be really customer centric, because the end consumption is all by the customers. They are the ones who will make or break the entire organization. Now there is a company called Blue Chip. I've never, been working for. I've never been, worked for this particular company, but I happen to meet a couple of customers from the industry who are clients to this company called Blue Chip. Blue Chip company. If you walk into this particular company, right, it's not a very well organized, large organization. एक ऑफिस के अंदर there is one chair and there are 4 people who are waiting to take their turns to be seated on the computer to do their task for the day. Now, this is kind of an environment that the company has, but every client of Blue Chip has come back and told me that come what may, we are not going to abandon Blue Chip. Our relationship with Blue Chip is going to remain intact. Only if there is a surplus cash, it gets deployed in your organization, right? So we do not need any fancy IIT, IIM graduates wearing, tie, blazer coming to us and approaching us. Why? Because Blue Chip has got a very strong corporate governance. I'm not a very big fan of, talking about large organization in terms of talking about corporate governance. So I'll talk my part. While I was pursuing my strategic management from one of the eminent B schools, I wanted to do some kind of a case studies on one of the organizations, which was again into strategic management. After giving a lot of thought, I chose the best worldwide known organization, which is Mumbai Dabbawalas. Right now, here when it comes to corporate governance, let me put this very clear to you: what Dabbawalas do and what is their methodology of a corporate governance. Every 15 days, all the members come together, they discuss the issues not only with the customers, they also discuss issues amongst themselves. They identify the best practices that should be done. They identify the new revenue stream that should get opened up. They identify who has to carry what kind of a load. And just to tell you, look at their own corporate governance. And a young dabbawala who can carry only 25 tiffins and an old dabbawala who can carry up to 40 tiffins gets paid equally. Now, this is a lot of insights that you get to identify only when you work with organizations like, Dabbawalas. So if we have some time, let us study about some organizations which are known to be a good corporate governance organization. Mumbai Dabbawala is a Six Sigma organization. Mumbai Dabbawala is an organization which was never on strike. Mumbai Dabbawala is an organization which has zero police complaints till date. Now, all this comes from a sector which is not too very literate but highly educated. So that is where the difference is in why we speak about the entire corporate governance culture. So 4 principles again I'll iterate, or rather reiterate, is we've already spoken about trust, so that's trust. The second is the transparency, third is fairness, and fourth, very important, is the responsibility. And let this sunk down to every employee in the organization, every employee of every organization rather. And that's where a strong corporate governance model can be built by any organizations. We have spoken about Tatas, which is extreme of the world, and we have also spoken about Dabbawalas, which is another extreme of the world. So hence, on this panel, we can very definitely conclude that it requires no specific strength of the organization. It is all about the willingness to implement the right set of practices and keep reviewing them on a timely basis when it comes to corporate governance. For other topics, Abhishek sir, back to you.
Thank you, my eminent panel speakers, for giving us such an insightful aspects on the corporate governance topics. So now I would like to open the floor for questions which all the panel members can take up.
Very good afternoon, all the eminent panel members. This is Professor Manoj, and what a wonderful session it was because it's provided extreme knowledge about how ethics is important. It is not the thing that is posted or written in the holy books, but it is equally important in the present era because during the talk our participant might have realized that for a good brand and for a great brand building, the ethics is the most important thing because any business which runs on an ethical parameters survives a long duration. It survives all the ups and downs because this is a business and it will obviously have ups and downs, but here we have to be stand strong straight, handling all the issues with the very sound mind. I thanks all the panels, and before thanking you, I would like to take the questions from the students and the participants. So students and the participants are requested to post the questions in the chat box so that I can put that questions to our eminent panels. Okay, sir, I got the first question from one of our student, and she's asking, I would like to request panelists to put light on tussle between Bharat Pay and Ashneer Grover. Yes, sir.
Manojji, would
I
you
will
like to
like.
take it up? Mr. Manoj Sharma?
Yeah. So, and the thing is that again, it's when we talked about this thing, there is again accountability and a trust between the management and the promoter has come out. Okay, again a cultural lag, which I feel is you know I've seen here in that you need to be clear that Mr. Vora and also Mr. Khan also added to the point of Mr. Money that these are the two three things which needs to be there. The same thing happened within the housing.com if I talked about. Okay, so there are things which need to be clear. When you as a promoter has a focused and clear objective to drive business. Okay, and whereas the other board members or any other team members, you can say that, like the Mr. Chintan Vora has said, need to be clear. If you have a different objective for that one single organization, which again comes to and issues arises like housing.com happens with the same. The same happened with the Bharat Pay as well. So I feel this is the only case where uh, a privacy, maybe you can say that a cultural lag, which I already told. So these are things which creating a bubble in a Bharat Pay. Anything uh, to add, Mr. Chintan?
Sir,
I guess.
I just want to ask an add-on question on the basis of the previous question. Can we define the ethics for the fintech companies and how we can define the ethics for the fintech companies?
Yeah. And so the
Uh,
ethics, fintech, the ethics, fintech company has a more responsibilities towards the country. For India, I'm talking about. Maybe different for other countries. I'm talking about. You have a different altogether consumers which we are focusing on, because nowadays India is the most largely mobile operating, internet users in India. So you have a larger customer base available for you if you are focused and clear on your duty. So the ethics and corporate responsibilities come for the fintech. First of all, is to leverage these things and try to implications like financial literacy and parity, which all you need to be there in a system. Like आपको कस्टमर से टच होने के लिए उसको फाइनेंशियल लिटरेट करना पड़ेगा. अगर आप उसको लिटरेट नहीं करते हो और आप probably like rightly Chintan Vora said कि आप बैंक में हो और आप यूलिप बेच रहे हो बिकॉज आपको सेल्स प्रेशर है, ठीक है। सो ऑलवेज if you want to grow in a system like fintech company, you have to be a customer centric, which is more required, and you should have your accountability which kind of products to be sold to customers, and again vis-a-vis your employees are clear about the objective which you are into. These are the
Yes.
points.
So
Okay,
I
so
have
I'm taking the next.
something to add, Professor Manoj, to
Yeah,
that.
yeah, yeah.
It will take 30
Yes,
seconds. Um,
yes, sure,
you
sir.
know, slightly upon the Bharat Pay element, this in fact is an interesting case for one more reason, that here the board of directors have an allegation against Ashneer Grover that his wife has had some contractual invoices, cleared up, for which they cannot find the right numbers or tally the accounts for it, right? Now
True.
in this case, if you see, this is a video con which is being managed at the corporate governance level in terms of ethics. So here the management has stood up against their own promoter that no, what you're doing is wrong and we will take an action against you. Okay, before a big scam is coming out a few years later, they are actually taking a proactive step towards controlling it. That is how
Right.
we can look at it. And and on the second part, the element that you added, Professor Manoj, with respect to what can be the definition or boundaries for fintech, uh,
True.
uh, it is not easy. We all understand it is going to be very dynamic, but there is one simple thing that we all know deep in our minds and our hearts, that Mr. Manoj Sharma mentioned, and earlier Dr. Chintan were also mentioned that it is about, am I getting any value out of it as a customer? Am I being treated right as a customer? So if you have to amend your policy of the organization to support a customer in a better way, do it.
Okay.
That is how we can look at it. So every time there has to be an evolution in the procedures, so that everyone, as a customer, gets benefited and treated fairly. Yep. Thank you.
Okay, so I think that was the next question that I was supposed to pick. How we can stop exploiting the loopholes in the law, because that is the loopholes which creates the value of unethical practices to the organization. So, Abhishek sir, would you like to answer it?
So this is a very valid question, and it will come to mind like among the best of the frameworks, like the examples of like ICICI Bank, which has been there in institution, I think, since more than 40-50 years, and has among the best frameworks defined and all that. Still, you see these kind of occurrences happening. The same like NSE, it is supposed to be one of the best institutions, pretty long time, and it was created with an objective. Earlier people had some issues with BSE, like when FIIs came to India, they felt that the kind of trading which is happening in the BSE, the open outcry method, doesn't works for them. They wanted more like transparency and all. So that was the purpose, while NSE was created with like that it will provide a kind of benchmark governance standards so that FIIs could trade with it. But with the best of the intentions, the institutions which are created are having all the right frameworks. If the people who are managing them, they are clever enough and outsmart the rules and regulations by working around the rules, so then the system gets cheated. So it's like your personal ethics which comes into the picture, and the board of the governance, like the rules are in place. So if anything, like my eminent speakers Mr. Khan and Mr. Sarma explained in the fintech world, like in that case the board members stood up and they asked the question with the promoters. So in that sense, their fiduciary duty was done. While in the case of like ICICI Bank and ILFS, we see all the institutions like credit rating agencies never ask any question to Mr. Parthasarthi. They gave AAA rated. Same happened with Lehman Brothers also worldwide, if you see. So before the default, it was a
Yes.
AAA rated company. So the kind of duties which are governed to the KMPs, like the independent board of the directors, if they don't follow that. So any kind of rules and regulation laid out cannot protect us. So ultimately, ethics has to be followed in a full sense. It cannot just by complying with a tick mark you can do that, because ultimately it's the people only. So if the management is so powerful, as in the case of Chanda Kochar, or in the case of Chitra, or in the case of Miss, um or in the case of even Mr. Parthasarthi, so what happens? The board and everybody starts complying with the what the dictate the CEO is asking to them. So then the other fiduciary body just becomes a kind of a checklist and tick mark, following the regulations, but not truly following in the spirit. So hence, it is more to do with like how this spirit of ethics and business governance gets inculcated in each and every employee from the top to the bottom, so that everybody speaks up. Like, this is my fiduciary duty. This is like the role which I am having, and I should speak up if anything is not followed as per the spirit. So that has to come more by the way of culture rather than just by written rules.
Written rules.
So,
True, sir.
one point,
And we
one
can
point
put the
actually, I
same. Yeah, yeah, Manoj sir. Yes, sir.
one
Yes,
point
sir.
I will add to the Mr. Manish. The the things it's required for management to have a proper whistleblower policy, which needs to be there, and it's to be clearly uh, explained to each and every employee, which definitely help you to get this kind of ethical and governance issue to be shown. That is again comes to the intention and responsibility of management and board of directors to, and maybe HR to follow the process and create a proper system for whistleblower, which definitely help not lead a single individual to unethical practices for the organization. Yeah.
100% agree to
Okay,
that.
sir.
Yes.
Yeah, and so what we have learned from the Bharat Pay episode is that even the NSE employees can also raise the voice, and it should not be happened what it had happened during that time period. Yeah. So with the NSE thing, I one question has been raised, and I would like Dr. Chintan Vora to answer it. Do you believe, sir, the regulators should be empowered with more teeth so that they can come out and take the necessary action? Because the penalty they are levied on that people are very base. So how we can empower SEBI, or how SEBI can do some actions into this so that it can be avoided in the long term.
So I would answer it a slightly different way. Regulators have got good enough teeth to bite the sharks as well, right? So they've got all the powers. It's not about whether they should be given more powers or not, because they're the ones. So if you look at the entire NSC episode, right? Chitra Ramakrishna was one of the members who drafted the entire policy for the SEBI when all the regulations were getting set up. This was way back. This was done. So regulators have got all the power. It's about how well they are able to empower their own selves and have a very strong will to execute it. So SEBI has got a lot of power. So there is no question that the regulators do not have power. Now here what happens is that whenever you're creating a board, now what where exactly in case of NSC, because there's all retrospective discussions that we are doing. But if we have to look at a very proactive approach, that's where the power really comes into picture, not in probably being very reactive. So if I have to take a very proactive kind of an approach, what rather I would have thought about in such kind of a case, that when you're creating a board of the organization, which is such an impactful organization to the entire country, the board has to be really really diverse. Now a very less diversification in the board doesn't really invite fresh thoughts, fresh ideas. So diverse board will always bring in something new onto the table, like our guests here. I mean, somebody happening to be from the big fours, or the regular, I mean, the tech space, the fintech space. Now this diversity will bring in newer thoughts, newer ideas, and that's where it can be regulated even better. The second thing is that, does this kind of an organization conduct a regular town halls? Now while you speak about town halls, it's kind of a get together of some not only the board of directors, but some key representatives from the entire periphery of all the stakeholders, right? If this was to come into picture, a small time broker would have come up and said that, look, because of the co-location issue, we are not getting the data right in time, and hence we are not getting any benefit out of it. Now, there was no town hall that was getting conducted. The question is not what NSE should have done. The question is that what other organization now start doing it. In a smaller organization like us, we have a monthly town hall, right, that gets conducted every month. So a sales representative will come and say that, look, I have a problem. A marketing representative will come and say, I have a problem. At the same time, the compliance representative will come and say that these are the not so very right kind of a practices which is happening. So in a fintech world, it's a very hookah world. So coming back, regulators have got enough power. All that needs to be done is to exercise it at right time. And it's not about drafting the regulations, it's about how you keep monitoring those particular regulations on a regular
Very true.
basis. So
True,
that's
sir.
where I'll sum up this particular answer, and hope this is answered well.
Yeah, sir. So one of our student want to know about the role of cloud funding.
Mansur, if you
So I
can
think
redirect this question to a specific speaker, please.
I
Uh,
would you want me to
Chintan
take
sir,
it up?
yeah, you can, sir. Mainuddin sir,
Okay,
you
and
can.
then I can request my fellows to just elaborate more on it. So crowdfunding is, there are a lot of formal methods and approaches, as we know, to get investments for any ideas or businesses that we want to bring into the society, right? And those formal investments are usually through, venture capitalists and, other banks, as we talk about business loans from various banks and various initiatives that also come from the government. Okay, like we have the Startup India program and other subsidies that happens in specific industries. So if the government wants to promote something in agricultural sector, they'll give you certain subsidies in the uh, you know raw material or the machineries that you require for them, and so on and so forth. uh, Crowdfunding is a kind of fund that is contributed by individuals, okay, who we do not have a lot of know-how about. So it is small sums of amount by a larger crowd who feel that this initiative is good according to them, and it is possible because of an internet era. So if you do not have internet, if you go back 20-30 years, okay, you will see a kind of seminars happening on a weekend where people are called, they are given pamphlets and they are spoken about with the ideas, and individuals are asked to invest. But now that has gone to a next level through internet, where a website specially for these kind of investments are created, where you put across your idea, where you say this is what your business is, this is how much the fund you want to gather or capture, and people will invest, and basis their proportion of investment they get returns on it. And usually it is not as formalized, but it is purely, this question is interesting because this is purely based on the trust and based on the faith that those individuals have in that proposal or that venture at that point in time. Yeah.
Okay, thank you, sir. And one more question is there. I want to raise this question to Abhishek, sir. One of our students want to know that we are ranked 15th in terms of corporate governance. So how we can scale up and come under the 10th, the first 10 countries?
So in corporate governance, like we have one of the best regulators in place, which is the SEBI. Plus, we have all the appellate authorities like SAT and above. So the regulations are there, the framework is right. It is just that the in our country, like implementation takes time, or there have been circumstances which create some kind of negativity among the developing nations. So, like, even in the case, just for an example of NSC case, so what happened, like, the SEBI was there who was probing the co-location case, and then when all this surfaced up, and if we read newspaper, even the SEBI officials were locked up. inside the NSCA offices when they were trying to do all the kind of searchings and trying to find out the thing. So there are like tools now. Mr. Damodaran, who was the SEBI chairman during the time, he went when he tried to resolve the situation and get deeper into the murk. He was after that he resigned very shortly. So whether it was some kind of a political pressure or something which led to his resignation, God knows. But we have all the frameworks in place. It is just that our judiciary system need to be fast tracked a bit so that we have the rules and regulation, but to give that kind of punishments. And when the Enron happened, you had a 99 years case term in USA, while in India these kind of terms are unheard of. Even after when Mr. Raju admitted to the fraud, so there was no severe punishment till they admitted out to him, even though there are rules and regulations in place to meet out. So on the ground, like when things doesn't, when FIA see that like the same kind of things which happen in the developed nation, when some scams happen and the same kind of punishment doesn't get translated to Indian environment, it acts deterrent to them. They feel that the our framework is not strong enough to protect their capital. So Satyam was a case where the FI is a very high investment percent as a percentage and where they lost severely. So that like if you see that time due to that scam there was a big FIA outflow after that. So that creates a kind of big negativity in the minds. So similarly in NSC is a big institution. If these kind of events come into their mind that even the bourses they do all the kind of insider trading or the other regulations which are not following the compliant, even if though we have a systems and checks in places, it will create a kind of negative perception. So we need to empower, first of all, politicians to do less intervention in these kind of things, so that there is a definite teeth that regulators can act. So now, right now, the rules are there, but because there is always every institution will ultimately be controlled by some ministry. So from there the pressure comes in, and people are unable to act. So that perception need to be removed, so they need to be more autonomous in the sense they act, and the judiciary system needs to be fast tracked. So right now, even if SEBI gives any order and punishment, it goes to SAT, then it goes to courts, and ultimately people feel that the decision has not been made and the proper judgment has not happened. So Indian judiciary system it needs to be fast tracked. So even in the case of right now, if you see the Future Group and Amazon case, so the case has been
Yes.
hanging since last 1.5 years. So when there no decision is made and the employees suffer, the shareholders suffer, the bankers suffer, then investors lose trust in such a system. And then they, even though there are regulations, but it is not working because justice delayed is ultimately justice denied. So then it all creates negativity. So we need to fast track the judiciary system so that the punishments are met out faster and the proper decisions are made. And for that, if we require, we need to there are various judiciary posts which are lying vacant. Government need to expedite in filling those things. So that is the element which is missing right now. So there are rules, and even judiciary's rules are one of the best, but the implementation is a challenge.
Challenge. Okay, sir. I think this will be a never-ending Q&A. But I understand this is a Sunday, and you have taken your precious time. So I stop here taking the Q&As, and I will like to express my gratitude that you have given your precious time, and that too on Sunday, a non-working Sunday, a non-working day. And I do realize an ex-corporate that how a Sunday matters, because for we academics we get few holidays during our festive season, but you guys are really working hard. I thank all the panelists for giving us time and enriching us and our participants with lot of insight, because that is something which is very necessary and part and parcel of our life, that ethics has to be there. Whatever you do, there should be some ethical things. That's why, that's the only way how you can scale up in the ladder and reach the heights. Okay, with this I also take the opportunity to thank my director, Dr. Hirish Luhasa, for always inculcating a culture of positive thinking in us, and pushing us hard, checking our limits so that we can reach new heights. along with that, I definitely want to thank our faculty members, especially Lalit sir, Professor Lalit sir, because he has worked hard to conduct this session live. And not to forget Dr. Ati Sharma for guiding us and giving us some value inputs by Professor Prapti. So, Duha sir, I will like to give it to you to end this session, sir.
Thank you. Uh, Thank you, everyone. I think Mr. Abhishek Mani, then Chintan, then Mano, then Mohidun Khan covered very well actually all the topics. My one point is, can ethics be governed by act? And second, after having qualified auditors, even the corporates fail. So what suggestions for you actually? Can you take Ms.
So just
Abhishek
to
Mani?
yeah, to take an example of the auditors act. So so what happens generally like in ILFS, so a scam or even in case of Reliance Home Finance also case, if you see the auditors were there and were pretty renowned auditors in all the cases. So there were big four auditors also in place. However, so what happens ki like as long as they feel that things are going, they don't feel that like there is a big risk to the organization. Many times they go into following ethics by the total spirit. So when they should have checked into the related party transactions and highlighted those in the notes, those were missing aspects. So as per rule, it was okay that accounts were okay, but like if in the notes, if any significant policies which are implemented, like if any loans or any kind of transaction done to the related party, those should have come under the notes so that every investor, every bankers are aware of those parts. So in that aspect, the auditor didn't did the duty to the fullest extent and ignored that. And when the problems became unsurmountable, that it cannot be hidden, then what happens? The auditor suddenly resigns, and so it is more of case like following as per rules rather than following ethics fully. So where the auditors also failed in, and credit rating also failed, so they also have the information, but they didn't acted on that. So this is how like the ethics is much more critical. The rules are in place. They have been ICI frameworks gives them the proper rules and accounting background to follow. But in actual spirit, many times it gets hidden down the carpet. So in the case of this, like the regulations for the related party transaction was that like if any transaction, if it is more than 10% of your revenue, it needs to be reported. So now to further tighten this up, because they create further many companies, like the corporates can create a jumble of companies. One company is a parent company. Now you can have more than 200, 300 subsidiary and associate companies kind of a scenario. So what happens like no such transaction will look such a big to be reported. So yeah, so now what they are putting that instead of just 10% limit, they also want like if related party transactions are more than 1,000 crore, that also need to be reported from this year. The SEBI is has put in a new kind of a disclosure norm. So it is ever changing norms. So as new scams unearth and new problems come in, the regulators will act upon and make new guidelines. And further to enhance the governance practices, the regulators have some suggestions like the your managing director and the chairman post should be separate. Right now, many corporations have the CMD as the same position, so it gives too much power to a single person. So that is also in a spirit that the recommendation is there that the all large listed companies should at least have a chairman and MD position as a separate, so that the governance policies are follow in more in a spirit. Further, in case of like accounts to be more clearer and the no governance lapses are there, they also want the CFO post to be different so than the MD post. In some of the companies, even the listed companies, we see that there is no CFO designated. So all these leads to lack of control, that some powerful position having all the control and violated the rules and regulations.
Thank you, Mani sir. You cover very well. And I think all the questions, all the panelists had covered very well, and I believe our students will definitely learn from today's interactive sessions. Thank you, everyone.
Thank you.
Thank you.
It was a
Thank you,
pleasure.
everyone.
Thank you all.
Thank you.
Thank you,
Nice to
thank
meet
you, thank you,
you.
everyone.
Thank you.
We can conclude with this. Yeah, thank you, everyone.
Thank you. Thank you.